Good day and welcome to the World News on Souqnews Television. Reaching you live from our studios here in Lagos, I am Omobola Sandra. First, the headlines. Federal government launches NASIP 2025-2027 to drive agricultural transformation across Nigeria. Pricewaterhouse Corporation projects 3.4% GDP growth and lower inflation for Nigeria in 2025. Tanzania and Japan renews economic cooperation with a focus on youth empowerment and sustainable growth. Russia has assured India of steady oil exports despite growing pressure from Washington. Napoli target Genk's Tolu Arokodare as Lukaku replacement amid injury. The federal government has launched the third National Agri-Food Systems Investment Plan, NASIP 2025-2027, to accelerate agricultural development and bolster food security across Nigeria. The new investment plan was adopted during a three-day validation workshop on the 2022-2024 Agricultural Joint Sector Review, JSR, and NASIP, held in Abuja, and organized by the Federal Ministry of Agriculture and Food Security. Speaking at the opening of the workshop, Dr. Marcus Olani Ogumbi, Permanent Secretary of FMAFS, stated that the initiative is aligned with the Comprehensive Africa Agriculture Development Program, CAADP, the Africa Union Strategic Framework for Agricultural Growth and Economic Advancement. The NASIP 2025-2027 is designed to provide a structured investment roadmap to enhance productivity, promote climate-smart agriculture, improve food systems, and support rural livelihoods. In a strategic move to boost national food production, Niger State Governor Umar Bago has donated 100,000 hectares of land to Lagos State for agricultural development. The announcement was made during the Agric and Export Expo 2025, sponsored by First Bank Nigeria and held in Lagos on Tuesday. Governor Bago highlighted the need for interstate collaboration to address food security, particularly as Lagos, Nigeria's most populated state and smallest by landmass, seeks innovative solutions to expand its agricultural output. The land donation will support large-scale farming initiatives aimed at enhancing local food supply, reducing dependence on imports, and creating value chains for export. The initiative aligns with the federal government's renewed hope drive to strengthen agriculture as a cornerstone of economic diversification. The policy push emphasizes increased productivity for both domestic consumption and international trade, positioning agriculture as a key contributor to GDP growth. The federal government has initiated a comprehensive review of Nigeria's telecommunications industry policies to attract increased foreign direct investments, FDIs, enhance service quality, and keep pace with rapid technological advancements in the digital space. The review is aimed at closing existing policy gaps in the Nigerian Communications Act of 2003 and addressing contemporary challenges while ensuring regulatory clarity for future developments. Dr. Aminu Maida, Executive Vice Chairman of the Nigerian Communications Commission, NCC, disclosed the development, noting that the initiative is being led by Minister of Communications, Innovation and Digital Economy, Dr. Bosu Tijani. He emphasized that the evolving nature of global digital ecosystems demands agile and forward-thinking policy frameworks. The review will focus on making Nigeria's telecom sector more competitive, improving investor confidence, and ensuring that regulations remain responsive to emerging technologies. Stakeholders across the industry are expected to play a key role in the consultative process. And now the federal government plans to replicate the success of the Lekki deep sea port across Nigeria's maritime sector as part of efforts to drive economic growth and trade expansion. Minister of Marine and Blue Economy, Adegboyega Oyetola, announced this initiative at the Nigerian Chamber of Shipping breakfast meeting held in Lagos. He stated that the administration of President Bola Tinubu is committed to building a modern, secure and global competitive maritime industry, positioning it as a key driver of national development. Speaking on the theme, Unlocking Opportunities, the Lekki Deep Port Sea Playbook for Trade and Shipping in Nigeria, Oyetola emphasized that the Lekki port stands as a transformative model, showcasing the possibilities of strategic investment, innovation and public-private partnership in the maritime space. The Director General of the Civil Aviation Authority has called for immediate and unified efforts to address growing concerns over aviation security in Nigeria, following recent incidents of passenger unruliness and systemic lapses. Speaking during an emergency meeting of the National Civil Aviation Security Committee held in Abuja, the DGCA emphasized the urgency of restoring public confidence in the country's air transport system. It said aviation regulators, airlines, airport operators, and security agencies to confront shared responsibilities in ensuring aviation safety. The DGCA noted that recent developments have exposed vulnerabilities in operational procedures, technological infrastructure, and human response mechanisms, posing serious risk to the integrity of the aviation sector. It stressed the need for comprehensive reforms and enhanced coordination to close security gaps, improve incident response, and strengthen regulatory enforcement. Nigeria's gross domestic product, GDP, is expected to grow modestly by 3.4% in 2025, according to a new report by PwC Nigeria. The projection, published in the firm's media review and updates, attributes the anticipated growth to increased crude oil production and stronger performances in key sectors such as finance and insurance, construction and information and communications technology, ICT, and real estate. In addition to the GDP forecast, PwC also projected a significant moderation in headline inflation, estimated it will decline to 21.46% in 2025. This would mark an improvement from previous highs, offering potential relief to consumers and businesses affected by the high cost of living and doing business. The media publication builds upon PwC's earlier 2025 outlook, providing fresh insights and updates on critical macroeconomic trends shaping the second half of the year. We'll take a break, and when we return, World News continues on Souqnews Television.
Welcome to the Africa Development Studies Center, ADSC. ADSC is an organization focused on training and research to advance sustainable development and growth in Africa. We exist to facilitate customized training, research, and study exchanges worldwide on leadership, management, and critical development issues. The center offers a platform for the exchange of ideas and best practices. Our comprehensive services encompass research, consultancy, capacity building, training, and education programs, as well as publishing and disseminating development-related knowledge. Our faculty consists of experts and researchers with extensive experience in policy formulation, implementation techniques, and monitoring and evaluation. Our methodology involves talks, individual and group exercises, games, video screenings, and discussion seminar sessions in a cozy atmosphere, making learning enjoyable for our participants. For more information, email us at info@adstudycenter.com or call +234 912 039 2362. Visit our website at www.adstudycenter.com to learn more about our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Anthony Onyemaechi Elumelu was born on the 22nd of March 1963 in Jos, North Central Nigeria, to Susanna Dominic Elumelu, originally from Delta State. Tony earned a degree in economics from Ambrose University, where he laid the foundation for his future career, and then furthered his education at the University of Lagos, where he obtained a master's degree in economics. His academic journey also includes attending the Harvard Business School, where he completed the Owner of President Management program, equipping him with advanced business management skills. Tony currently serves as the chairman of Ayers Holdings, Transcorp, and United Bank for Africa, UBA, demonstrating his significant influence in the banking and investment sector. He founded the Tony Elumelu Foundation, which aims to empower African entrepreneurs through comprehensive training, mentorships, and funding opportunities. In addition to his professional achievements, he's also a family man, married to Dr. Adele Vivian Elumelu, and together they have 7 children. In 2020, his efforts were acknowledged when he was named one of Time's 100 most influential people in the world. Anthony Elumelu's net worth is estimated to be around $700 million, a testament to his successful ventures and strategic investments. Elumelu continues to be a driving force in the business world, advocating for sustainable economic growth and empowering the next generation of African entrepreneurs.
Welcome back. Tanzania and Japan have renewed their cooperation with a strong focus on empowering youth, driving innovation and fostering sustainable growth. The discussions held under the framework of the Tokyo International Conference on African Development reinforced the principles of African ownership and international partnership as central to building stronger ties that directly benefits Tanzanians. Japan International Cooperation Agency President Tanako Aikiku highlighted that Tanzania's young population, combined with its growing demand for technology and entrepreneurship, makes the country a strategic partner for Japanese investment. Japan pledged support in areas such as industrial growth, vocational training, and technology-driven enterprises to equip Tanzanian youth with competitive skills for the future. And now South Africa's consumer inflation rose to 3.5% year-on-year in July, up from 3.0% in June, matching economics expectations. The increase keeps inflation comfortably within the South African Reserve Bank target range of 3% to 6%. On a monthly basis, inflation quickened to 0.9% in July compared to 0.3% in the previous month. The trend has given the central bank space to cut interest rates at 3 of its 4 policy meetings so far this year, most recently lowering its main lending rate to 7% in July. The bank has also signaled support for moving toward a stricter 3% inflation goal, down from the current midpoint of 4.5%, to bolster global competitiveness. However, Finance Minister Inogodungawana has yet to formally approve any change to the inflation target, saying further consultation is still needed. And now Kenya has opened negotiations with China to convert its dollar-denominated loans into yuan-based debt in a move aimed at reducing annual repayment pressure. Treasury Secretary John Mbadi confirmed that discussions include extending repayment timelines to give the government greater flexibility in managing its budget. Currently, Kenya spends about $1 billion yearly on servicing Chinese loans, making Beijing its largest bilateral creditor. By shifting to yuan and restructuring the terms, Nairobi hopes to cut costs and shield its economy from fluctuations tied to the strength of the dollar. The talks are expected to conclude soon, with officials signaling that the deal could provide breathing space for Kenya's finances while strengthening trade ties with China. This shift also reflects the broader trend of African economies seeking alternative currency options to ease external debt vulnerabilities. Also, Kenya's government is considering splitting Safaricom PLC, the nation's largest listed company and the backbone of its digital economy, into 3 separate entities. Treasury Secretary John Mbadi said on Wednesday that a government assessment had shown a huge benefit could be realized by reorganizing the telecommunications giant to boost efficiency and create stronger value for investors. Under the proposal, Safaricom would be divided into a core telecommunications services company, a tower management unit, and M-Pesa, its mobile money platform that dominates digital transactions across Kenya and parts of Africa. Authorities believe the separation will foster greater communication, reduce operational bottlenecks, and attract new foreign and domestic investment into each arm of the government. Safaricom, valued at over $11 billion United States dollars, is partly owned by the Kenyan government and South Africa's Vodacom Group, with the rest of its shares held by local and international investors through the Nairobi Securities Exchange. China is preparing a sweeping overhaul of its petrochemicals and oil refining industry in a bid to tackle long-standing overcapacity. The government's plan includes shutting down smaller, outdated facilities and channeling investment into advanced, higher-value materials. According to people familiar with the matter, remedies could be announced within the next month once the Ministry of Industry and Information Technology gives its final approval. The restructuring will mark one of the most significant steps to reshape an industry long burdened by excess production in low-value segments. Beijing's move is expected to not only improve efficiency, but also strengthen China's competitiveness in global energy and chemical markets. We'll go on another break. Stay tuned.
Wole Soyinka, born Akiwande Oluwole Babatunde Soyinka on July 13, 1934, in Abeokuta, Ogun State, southwest Nigeria, stands as one of Africa's most celebrated literary figures and a global icon of resistance against oppression. His life and works reflect an unwavering commitment to justice, culture, and the transformative power of arts. Soyinka was born into a Yoruba family in colonial Nigeria, an environment that exposed him to both traditional African culture and Western education. His father, Samuel Ayodele Soyinka, was a school headmaster, while his mother, Grace Eniola Soyinka, was a devoted Anglican. This blend of indigenous and colonial influences deeply shaped Soyinka's world. Soyinka attended Government College Ibadan and later proceeded to the University College Ibadan, where he studied English and literature. Soyinka completed his education at the University of Leeds in England, earning a degree in English and later a doctorate degree. In the late 1950s, Soyinka began working as a dramaturgist at the Royal Court Theatre in London. However, his passion for storytelling and cultural preservation drew him back to Nigeria, where he founded two theatre groups known as the 1960 Masks and the Orisun Theatre Company. Soyinka's works, often a fusion of Western dramatic techniques and African themes, address universal issues of justice, freedom, and human dignity. His early play, titled A Dance of the Forest, which was introduced in 1960, written to celebrate Nigeria's independence, critically examined the nation's socio-political trajectory, setting the tone for his career as both artist and activist. Soyinka's activism became more visible during Nigeria's post-independence years. In 1967, during the Nigerian Civil War, he called for a ceasefire between federal forces and Biafran separatists. This led to his arrest by the military government, and he spent 22 months in prison, where he wrote a short drama titled The Man Died, Prison Notes, a harrowing account of his imprisonment and a profound critique of authoritarianism. Soyinka has authored more than 20 works, including plays, novels, poetry, and essays. In 1986, Soyinka became the first African to win the Nobel Prize of Literature, an achievement that brought global recognition to African literature. Soyinka remained an outspoken critic of oppressive regimes, often at great personal risk. His activism extended beyond Nigeria, addressing global issues of injustice and human rights. During periods of military rule in Nigeria, he went into exile, continuing to write and speak against tyranny. Today, Soyinka is celebrated not only as a literary giant, but also as a symbol of resilience and moral courage.
Interest in Nigeria's lithium reserves comes as countries worldwide scramble to secure supplies of the mineral, which is essential for powering the green energy revolution. In this special report by Bayo Olaoye, the need to harness this resource for growth and development is examined, with the evolution of electric vehicles and renewable energy storage systems. Lithium is a key component in the production of batteries for electric vehicles and renewable energy storage systems, and Nigeria is positioning itself to become a major player in the global lithium market. Nigeria's vast lithium reserves, valued over $34 billion, is no doubt attracting world attention, while lithium factories are springing up in different parts of Nigeria already. The attention of the international mining industry is also focused on lithium because it is critical raw material for the production of solar panels and electric vehicles. Analysts predict that global lithium market could grow robustly over the next decade, driven by the rapid adoption of electric vehicles and renewable energy technologies. Data from a global future market insight showed that the lithium mining industry has emerged as a cornerstone of the clean energy transition, driven by the skyrocketing demand for lithium-ion batteries. The surge in lithium demand is driven largely by the electric vehicles market, which accounted for over 70% of the global lithium consumption in 2024, according to an Iranian-based research firm. With countries such as the United States, China, and members of the European Union pushing for next zero emission by mid-century, lithium demand is expected to escalate further. The federal government, indeed, the Ministry of Solid Minerals Development, should intensify efforts geared at renewing and resuscitating the viable lithium industry in the country to its full potential. As Nigeria diversifies its economy into other sectors, the lithium industry offers hope and expectation that this sector would earn more revenue for the country. Nigeria should not just watch with folded arms, but must strive with the political will to develop and strengthen the country's vast lithium reserves.
Thank you for staying with us. Russia has reaffirmed its commitment to supplying crude oil to India, even as the South Asian nation faces new tariffs from the United States. Evgeny Griva, deputy trade representative of Russia in India, said in New Delhi on Wednesday that Russian oil exports are expected to remain steady despite growing pressure from Washington. The assurance comes as the Trump administration raises concerns over India's continued reliance on Russian energy, introducing tougher trade measures to curb flows. Analysts warn that higher tariffs could increase costs for Indian refiners, but note that Moscow's pricing advantages still make Russian crude attractive. India has become one of Russia's largest energy buyers since 2022, and officials on both sides suggest that strategic energy ties will remain strong, regardless of geopolitical headwinds. Indonesia's central bank has cut its benchmark interest rate by 25 basis points to 5%, marking the second consecutive monthly reduction. The move, announced on Wednesday, caught markets off guard as most economists had expected no change, with only 9 out of 39 surveyed predicting the cut. The surprise decision signals a clear policy shift by Bank Indonesia towards supporting growth, aligning with President Prabowo Subianto's agenda to stimulate investment and domestic demand. Officials also suggested that more easing could flow as the government seeks to balance growth momentum with global economic uncertainties. The move is expected to support infrastructure spending, job creation, and consumer activity as Southeast Asia's largest economy targets faster expansion in the coming quarters. Sweden's central bank, the Riksbank, kept its benchmark interest rate steady at 2% on Wednesday, holding back from a cut to counter a recent spike in inflation. The rate remains at its lowest level in over 2 years, a move that was in line with expectations from all 18 economies surveyed. Despite the hold, policymakers reiterated that a rate reduction was still likely before the end of the year. The central bank signaled that easing will be needed to provide support to Sweden's economy, which has been struggling with weak growth. The decision underscores the balancing act facing the Riksbank, keeping inflation in check while preparing to stimulate demand. Investors will now closely watch economic data over the coming months to see when the promised cut will materialize. The United Kingdom has recorded an 18-month high in inflation, with consumer prices rising 3.8% in July, compared with 3.6% in June. The Office for National Statistics reported that the increase was driven largely by higher food prices, motor fuel cost, hotel rates, and airfares, underscoring persistent cost of living pressures. This is the fastest pace of price growth since January 2024. The data has come in slightly above the 3.7% forecast by economists, showing that inflationary pressures remain more stubborn than expected for households. The continued rise in prices is adding strain at a time when wage growth has not fully matched the pace of living expenses. Businesses are also being hit, especially those in transport and hospitality, where rising input costs are now being passed on to consumers. European equities slipped on Wednesday as steep sell-off in United States technology giants dampened investor sentiment across the region. The stock's Europe 600 index dropped 0.2% in early London trading, extending weakness from Wall Street's sharp decline. Personal care companies were among the few gainers, offering some support to the benchmark index. However, industrial and construction-related stocks recorded the heaviest losses, reflecting broader concerns over slowing demand and tighter financial conditions. European technology shares mirrored the retreat in the United States peers, underscoring the sector's global sensitivity to investor risk appetite. The move highlights how weakness in American tech can ripple quickly through European markets. And now moving on to sports, reigning Serie A champions Napoli are reportedly pursuing a move for Super Eagles and Genk striker Tolu Arokodare to replace injured star Romelu Lukaku. According to Sports Extra, Napoli manager Antonio Conte is actively in the market for a new striker following confirmation that Lukaku will face a lengthy spell on the sidelines. Arokodare, who finished last season as the top scorer in the Belgian Pro League, has emerged as a key target for the Italian Giants. The 23-year-old Nigerian forward is currently valued between 20 million euros and 25 million euros by his club, Genk. Respected transfer expert Fabrizio Romano confirmed that Napoli made contact with Arokodare's representatives, underlining the club's serious interest. This move follows similar inquiries made earlier in the week for Manchester United's young striker, Rasmus Holten, as Napoli widens their search for a dependable attacking option. Barnsley manager Conor Hurricane has confirmed that Nigerian midfielder Kelechi Nwakali is no longer part of his plans for the upcoming season, with the club actively seeking to offload the player before the end of the current transfer window. Sports Extra reports Nwakali, who signed a 3-year deal with the Reds in August 2024, has been notably absent from all pre-season and early season fixtures. While his initial absence was explained as a delayed return from Nigeria due to family matters, it has now become evident that the midfielder is not in Hurricane's strategic plans. Speaking ahead of Barnsley's League One fixture against Peterborough United, Hurricane addressed the issue directly during a press conference. And that's a wrap on the news, but before we go, here's a recap of the stories. Federal government launches NASIP 2025-2027 to drive agricultural transformation across Nigeria. PricewaterhouseCoopers projects 3.4% GDP growth and lower inflation for Nigeria in 2025. Tanzania and Japan reviews economic cooperation with a focus on youth empowerment and sustainable growth. Russia has assured India of steady oil exports despite growing pressure from Washington. Napoli target Genk's Tolu Arokodare as Lukaku replacement amid injury. Many thanks for watching. Please do well to follow us on all our social platforms at Souqnews Television. My name is Omobola Sandra. Thank you for watching.